And it's time to do business again. This time it will take us 55 minutes to go around the world of business. It only happens here in Business Incorporated on Channels Television. Here's what we have prepared for you for this 55 minutes. In Ghana, there's a temporary ban on export of some staple grain. Inflation in Zimbabwe is still increasing. It's now at 0.4%. I'll give you some numbers. A price watch here in Nigeria. There's food, there's also transport fare. Good afternoon, welcome to the program. I'm Ini John Mekwa. Of course, we'll do business right now, and then we start from the global space as usual. Gold prices edged low on Tuesday, following a slight recovery in the dollar, although losses were cut by investor optimism for imminent U.S. rate cuts and lingering concerns about the Middle East crisis. Let's keep our eyes on the number now. We start with gold. Well, it's supposed to be gold. So spot gold was down 0.4%, $2,507.96 per ounce, and prices have risen more than 21.5% this year, hitting a record high of $2,531.60 as at August 20. Now we have it right there on the board. U.S. gold futures was down 0.5%, $2,543.20. The dollar index edged higher against its rivals, making gold less attractive for other currency holders. And traders see a 70% chance of 25 basis points rate cut, about 30% probability of a bigger 50 basis points reduction. Among other metals, now spot silver edged 0.1% higher to $29.93 per ounce. Platinum fell 0.5% to $957.55, and palladium rose 0.1% to $959.90. And since my colleagues were so eager about talking about oil, now we keep our eyes on the oil numbers, yes. So we see that it's red for oil at this time, 0.2% down for Brent at $81.25. WTI also down more than that, 0.4%, $77.14 a barrel. And we know sentiment around what's going on in Libya, where it's expected that oil fields in eastern Libya that account for almost all of the country's production will be closed, and production of exports will be halted after a flare-up in the tension over leadership of the central bank in that country, even though there are no confirmations yet. But we know that everything is not at ease right there. Also, bearish sentiment for global oil demand could weigh on oil prices, with Chinese demand having an outsized impact. The potential closure of Libya's oil field could tighten supply and, of course, increase prices. Now, here in Nigeria, the Nigerian National Petroleum Company Limited, that's the NNPCL, has commenced shipment of liquefied natural gas cargoes to Japan and China, delivered ex-ship bases, DES, that's how that's tagged. NNPCL achieved the milestone through the collaboration of two of its downstream subsidiaries, that's NNPC LNG Limited and NNPC Shipping Limited, which delivered its first DES LNG cargo from 174,000 metric tons LNG vessel to Japan. That happened on June 27. And since then, it said it has expanded its footprint to China with the delivery of one energy cargo on DES basis. NNPC Limited has been involved in energy trading since 2021, with its first LNG cargo sale in November of last year. It has since traded over 20 cargoes into the European and Asian markets on FOB basis. The collaboration is scheduled to deliver at least two more LNG cargoes to the Asian market on DES basis by November, and many more orders are expected before the end of 2024. Well, closely related to that is transport fare watch. Let's see what July looks like. This is according to the National Bureau of Statistics, transport fare watch for July 2024. So looking at bus journeys within cities, they said it was at 942 naira 61. These numbers are average, so it may not be exactly, and that indicates a drop of 2.16% year on year, and then for year on year it's 29.46%. It was at 1,336 naira 29 kobo. That's talking about July 2023. It was here, and then bus intercity at 7,117, and that's month on month. There was an increase. So talking about between June and July 2024, there was an increase of about 35%, beg your pardon, 35%. It was supposed to be at June, 7,092 naira, 3 kobo. So obviously we would expect that the whole issue around fuel scarcity and all of that, and we know what happens when the queues begin at the filling stations. The buses also increase their prices, you know, and so that has also added to that. Airfare, I need not tell you, it's been increasing. We see it was up 9.65%. Year on year, worse than that. This is month on month. Year on year, airfares have gone about 25.12%. An average of 78,775 is what we had in July 2023. But as at July 2024, an average air ticket was at 98,561. We do have, for food now, you know, that's more interesting to everybody, because even if you don't travel, you have to eat. So we see food price watch for July. A kilogram of brown beans at 2,444 naira 81 kobo. Year on year, that's comparing it to July 2023. We saw more than 250% increase. Wow, so it was about 673 naira 53 kobo compared to July. This is July 2023 and this is July 2024 for 1 kg of brown beans. Month on month, however, we see that increase has reduced. That's why we see the rate of inflation reducing. So this is what it means. It doesn't mean that prices are not increasing. It just means the rate of increase has reduced. You know, so comparing to July 2023, we had over 250% increase. But comparing June to July 2024, we see it's just about 6.63% increase. Now, agri eggs, we know what has been happening to eggs. Very important. So 12 pieces, this is the finding of the NBES, was at 2,170 naira. Year on year, we noticed a 17% increase from about 1,000 naira. That's for 12 pieces, medium size. Month on month, however, is still increasing, but this one is by 12.11%. So, I mean, it's still high and close to what you have year on year. I guess we haven't found some solution to this, unlike those very perishables that we've seen some solution. Now we see the next one, the next commodities, if we may. I think that's tomatoes. So for tomatoes, 1 kg, we saw a 203% increase, more than 203% increase, 203.53% year on year. That's comparing what we had in July 2023 to July 2024. There was a 203.57%. I'm sure you felt it in your pockets. It's beyond the numbers now. And so it went from 557 naira 96 kobo in July 2023 to 1,693 naira 83 kobo in July 2024. However, on a month-on-month basis, and we've had this discussion here, how we've seen those perishables, you know, during the protest and all of that, we've seen the price reduce. So there was a 26.43% reduction in the price. That's month on month when you compare June to July 2024, an average of 2,302 naira. That's what it was after that reduction. Between June and July, just a little reduction. But of course, it's not back to what it used to be, because year on year, we see over 200% increase. Now, for a kilogram of garri, we saw that it went up year on year. Well, thank God, my colleagues are back. We have it on the board. So, so for garri, 1 kilogram of garri, we saw it at 1,151 naira 79 kobo. Year on year, we noticed an increase of 167 naira 9.98. So it went from 429 naira 1 kg of garri 89 kobo to 1,151. That is how we got the 167.98%. Month on month, however, it still went up, but not so much. So I'm sure by August, by the time we see the numbers for August, we will see even more reduction. Remember, it's harvest season, that's number one. Number two, the federal government has shared some bags of rice and all of that. And then also, there's the import duty suspension of the federal government for 150 days. That has also kicked in, and we'll see the numbers by the time we see the August numbers. And then yam, like gold, yes. So 1 kg of yam tuber was at, for the month of July, an average of 1,802 naira 84 kobo, and that indicates 234.23% increase year on year when you compare the price of July 2023 to July 2024. How do we survive in this country? So it was at 539 naira 41 kobo in July 2023, but went all over to 1,800 plus in July 2024. Month on month, however, harvest season again, we saw that there was a drop of 10.82% to sell at 2,021 naira. Don't you remember when you used to buy cheaper of yam for about 150 naira? I wonder if those days will come again. So that's the Food Watch according to the National Bureau of Statistics for the month of July. We hope to see more pleasant numbers at the end of August. That will be for the month of August, and it will continue to reduce, hopefully to be sustained. Now let's leave the market for a bit. Lagos Chamber of Commerce and Industry has opened its International Business Conference and Expo, Invest Nigeria. That's what they call it. The conference, according to the president, Mr. Gabriel Idahosa, is still ongoing as we speak. We'll explore Nigeria, global trade landscape, potentials in talent and entrepreneurial spirit, as well as African continental free trade area. The event should have a diverse group of experts who would share their insights on Nigeria's current state of investment opportunities, and discussions are meant to inspire and encourage people to think creatively, challenge the status quo, and explore new opportunities. Now, the Asset Management Corporation of Nigeria has suggested that Arik Air and Aero Contractors may be merged and turned into a national carrier because of the huge debts that they both owe. According to the Managing Director and Chief Executive Officer, Mr. Gbenga Alade, who shared this information during a meeting with some journalists, he explained that both airlines have accumulated so much debt that they may not be able to repay it. He mentioned that the idea of merging Arik and Aero Contractors into a national carrier was proposed to a former aviation minister, but the suggestion was not accepted. He further explained that a special purpose vehicle was created by the previous AMCON management to facilitate the conversion of these airlines into a national carrier, but it was sold off. However, he believes that they can create another SPV for this purpose. AMCON has also employed the services of international tracers into its efforts to recover debts.
AMCON being a government agency requires utmost transparency and integrity. Another area we're concentrating on is oil and gas. We know how important that sector is to Nigeria. AMCON has some oil and gas assets that are being resolved right now that we believe will boost oil output, generate more foreign exchange for the government, and help in the process of economic development as well. We also have telecom. All right, so these are the areas that we are concentrating. Aviation is also there. We want to concentrate in this area because we know that the assets in these areas are big, and once resolved, it will be obvious for every Nigerian to see what AMCON is doing.
So I'm still staying, of course, on the Nigerian economy. We saw that impressive number, more than 3% increase in the GDP for the second quarter of this year. We talked about it during Business Morning. Let's delve more into it, get another perspective with the Chief Executive Officer of Star Advisory Limited Investment, Mr. Kevin Ekalufo, joins us virtually from Lagos. Mr. Ekalufo, good afternoon, and thank you so much for your time. Hello, Mr. Ekalufo, can you hear me? I think you should unmute, yes. All right, can you hear me, Mr. Ekalufo?
Yes, I can.
Oh, great, yeah. So, expectedly, the government officials are very excited about this number, 3.19% of our GDP. We seem to be on track, to end the year green. I don't know if you see that also, or if you see this as this momentary victory for the economy.
I think we're actually edging in the right direction. We're heading northward. Um, One of the key drivers of this growth is the increase in oil production. Yes, the aggregate GDP, oil only did 5.7%. The non-oil sector is over 94%. But when you look at the increase in oil prices, the fact that they have been steady and production seems to be inching up, both crude and condensate is increasing. Um, the introduction of the military, the Chief of Defense Staff, helping to ramp up production, providing intensified security in the Niger Delta area, is, I would say, a welcome development to the economy. Also, um, there's a slight uptick in the services sector. There's also an uptick in the agriculture sector as well. Harvest is coming in. So definitely a lot of things are improving. Somewhat there's, yes, there might be some that might look cosmetic, but on the outlook going forward towards the end of the year, we expect that the
Okay, it looks like Mr. Kalufo is muted again. I hope he can unmute and then we can get him back on the program. Mr. Kalufo, can you hear me?
yes, I can.
Okay, yeah, your audio went off again. So you want to finish your thoughts?
Yes, what I was saying was that I expect that the growth in the economy going towards the end of the year is going to become stronger. Um, there are clearly some things that we are doing right, but there are still a lot of opportunities, latent opportunities that need to be unlocked. And I don't know if we have enough time. I'd like to go over um, them. You know, when you look at agriculture, the livestock sector was it trended downwards, 1.7% negative. That's a sector that needs adequate attention. Hopefully, with the creation of the Ministry of Livestock Development, I expect that this would create an enabling environment for the livestock entrepreneurs who are in that space, the companies who are in that space, to improve on their production. Because with improved production, improved sales, they would increase the number of employees, GDP would grow in that space. We look at even the government-owned entities. Recently, the NNPC came out with a report that they do not even have money to take care of the pipelines, to replace the pipelines. My question is, why have we not listed some of these government-owned entities by now? NNPC, NLNG that is doing well. There are a few other government-owned entities that could be listed on the stock exchange. They could source for private capital through the stock exchange. They could even do a dual listing, list in London or in Joburg or some other jurisdiction, the way Saudi Aramco did, you know, and they will be able to raise money that will drive growth in the economy. They have a lot of oil blocks that are within the NNPC's control that they're not currently, operating. They're not currently drilling. They're not currently increasing production. So if government says they want to hit 2 million barrels per day, we would expect that the key driver of that policy would be the NNPC. Now, the NNPC has tapped a lot of debt, has gone to the market to raise a lot of debt. But I would beg to differ that at this moment, they need to raise a bit of equity as well. And for them to do that, it's easier for them if they list on the stock exchange. They'll be able to raise capital and replace the pipelines, expand their investments across their different subdivisions within the NNPC Limited. And the same for NLNG. You know, I can go on and on across different sectors, whether it's the refining sector, all our refineries need massive injection of capital. You know, gas processing plants. We've called this decade the decade of gas. We need capital to do this. It's unfortunate that government keeps borrowing for things that we can actually bring in private capital to do. Okay, also looking at the sectors that went downwards, one of them was construction. You know, a very good reason why construction trended downwards is because government hasn't been able to, fund a lot of the projects they have. So the construction companies are not doing as well as they should be doing. And the reason why this is happening is because government is funding all from its own balance sheet. The purpose of PPPs, we are not having benefit for it in the country because the country and the government of the day has preferred to take all the debt on its balance sheet. And it's even killing our naira. Why don't we bring in private capital? A lot of these projects, whether it's the Calabar Lagos or the Sokoto Badagry or the Port Harcourt Maiduguri rail or road networks, all of these can be purely on a PPP basis, where we raise money from private capital and deploy this to these projects. And over time, these projects pay back these monies. Everything doesn't have to ride on government's balance sheet. This would grow our GDP significantly at a faster pace than if we decide to use government's balance sheet. Another sector I can talk about is the real estate sector. Government keeps coming every now and then saying, oh, we want to build 10,000 houses in Lagos or in Abuja or nationwide, and they're depending on government resources for it. A lot of this can be done with private capital. Government does not need to be the one using its own funds to build. The purpose of using PPP would increase the speed of delivery, would reduce the cost, the efficiency, and all the metrics you can think of. So at this moment, you look at many of the sectors. I would like to talk about health, for example. I don't know if you're aware that there's a massive drove of our doctors living for greener pastures. Policy, the GDP growth should be a KPI metric used to assess each of our ministers, whether the Minister of Aviation, Minister of Health, and I'll go through a few of them. So for healthcare, I don't know if you're aware that Nigeria, with over 220 million people, has maybe less than 15 neurosurgeons. And let me tell you how important a neurosurgeon is. If you have stroke, you have any brain injury, brain damage, spinal cord, those are the specialists. And we have less than 50. What does that do? If we cannot get those numbers up to thousands, the few that we have, they are leaving. We do not even have clinical psychologists in Nigeria. A lot of people study psychology, but are working in other sectors, either in HR, banking, and elsewhere. There are many nascent sectors that we have not even tapped into.
All right, Mr. Kalifor.
I can go.
Yeah, I know you can touch all the sectors, but thank you for that. Well, I hear you preach the message of public-private partnership, and we know it's already on, but I guess perhaps the government needs to create more windows for partnership, as you have noted. But thank you so much for your observations from the GDP number of Nigeria for the second quarter of 2024.
Thank you very much for having me.
Let's take a break now. When we come back, we'll head to the market with Aniti Edit. Welcome back to Watching Business Incorporated right here on Channels Television. We'll head to the market now. And good to know it's still a green market at intraday today. Aniti has the details.
Yes, good afternoon, Ini. And Tuesday's trading session, like you rightly mentioned, at intraday, still maintaining that 96,000 level. And yesterday we saw that some of the oil stocks, as well as the Dangote sugar and some...
I think Boa Food was a major driver of the market yesterday. Yeah. I wonder how that's doing intraday, if there's been some profit taking as expected, on that stock.
Yeah, well, we have an equity market analyst today, so he'll be telling us more about Boa Foods, as well as the market intraday numbers. But now let's tell our viewers, first of all, how this market is moving. 0.28%, like we mentioned just at the moment. And year to date, it has lowered, but still within the comfort zone of about 28.44%. Of course, we've moved all the way from the 35% to about this level I mentioned, 28.4. And the market, yesterday we saw about 28 gainers against 18 losers, and 36.67 billion being added to the market. And of course, the market capitalization is still within the 55 trillion level. Now, for South Africa's market at intraday, the JSE is up 0.35% and still maintaining that level. For the other sides of the market, we see mostly positive sentiment for the African markets. We see only the Kenyan Stock Exchange was in the red for the close of Monday's trading session, if we can have that on the board. But apart from that, we see that the market has been able to still maintain that positive sentiment. And of course, we will be looking out for how it turns out for the close of Tuesday's trading session. Now, for our discourse, we'll be talking about insurance sector, where we have the news just mentioned a couple of days ago that that industry, first of all, we had the banking industry and the regulator, that's the Central Bank of Nigeria, announcing that the banks will have to rev up their capital base from the current level, and that giving them a timeline of about 2 years. But this time, it's the insurance sector. And of course, we have many of the stocks listed on the NGX. And how will that affect the industry, particularly when we know that that's not the first time that they had mentioned that the industry should brace up for a recapitalization, but because that exercise was stalled, but this time it's coming a second time, which is almost at the same time that the banks are also trying to meet their minimum capital requirement. But now, to give us more perspective on that, let's bring in Abiodun Adedotun, equity trader with FP& Quest, for more on that. Thank you for joining us, Abiodun.
Hi. Good afternoon, Anita.
So it's nice having you again on the show. Now, let's talk about the insurance sector, insurance industry, to be precise. Now, Nigeria's insurance industry on the stock market, so far, it's in the negative 96.34%, but as at the close of yesterday, it was 1.1% increase. But now we also have that news that the industry regulator, that's the NICOM, has directed or made plans for insurers to brace up for a recapitalization. So how do you see this announcement by NICOM?
It's a welcome development by NICOM to try to recapitalize the insurance company. It's been long overdue. Of course, the companies in this sector should have been strengthened a long time ago. And of course, I think the regulator realizes this, and the conversation has actually been on for about 3 to 4 years. And it's time for them to really act to be able to strengthen the position of this company in terms of capital base. You know, these companies are taking different levels of risk, and of course, for you to be able to take serious level of risk as much as they do take, they need solid capital. So it's a welcome idea.
Well, still speaking about the insurance industry, which is a poor cousin to its relatives as a banking counter. We know that in the United States, insurance companies are actually bigger than the banks, but on this time for Nigeria, it's actually a reverse. Now, and we also have it that many of the players are kicking against this planned recap. Why is this so?
It's not surprising to find a few people to want to continue to hold on to the structure. You know, people have different reasons for what they do. But on the aggregate level, you know, we would say the bank should tell you that the financial penetration, financial literacy in Nigeria is still pretty much low relative to its potential. Insurance is far a lot behind. How many people have insurance on their houses? How many people have insurance on their cars? And a whole lot, even health insurance. You know, there's still a lot to be tapped from the insurance sector. In terms of institutional play, maybe perhaps they are there, but you still find some of the multinationals still doing business with in maritime. You know, they still do business even in oil and gas, because insurance companies are small and are unable to undertake some of these, you know, levels of risk. So for them to be able to come closer to their bigger peers abroad, they need this capital, and it's just the only way to go for now.
Okay, so still maintaining with the insurance. Well, this time let's go to the banks. With the bank recapitalization, we've seen that so far. There's a report that has it that about 44% of the market's performance was actually driven by the recap, and we've seen two banks come to the end of their recap, while we have two more still trying to raise up some cash. Now, what is your expectation for the fourth quarter, which would soon be coming up at the end, after the end of September? What's your outlook for more bank recapitalization plans or banks approaching the capital markets?
Okay. In terms of banking recapitalization, Fidelity, GTCO, and Access are the ones that have concluded the offer, and I believe they are going through different process with the regulators and coalition of data right now. I know Zenith is still out there. I still have quite a number of banks who still come out to come and take their own share, from investors. I think this process will run possibly till the end of the year, because there's every likelihood that some banks might still have to do some form of ad hoc, placements or private placements, to high net worth individuals or institutions to be able to solve what exactly is being required. Or really, it's looking like it's going on pretty well.
Okay, Abiodun, I think we'll leave it there. Would have asked you about the price of Bua Foods, but I think because of time constraint, we'll just leave it at the moment and watch out for how that market prints out at the end of Tuesday's trading session. But thank you so much for your time.
You're welcome.
So that was Abiodun Adedotun, equity trader with Ebien Quest. Okay, for the Middle East markets, we see Dubai, which was the lone gainer for the markets on the United Arab Emirates, 0.34% at intraday at 4,339.67. While its cousin there, the Abu Dhabi, is in the red, 0.20% at 9,337.49. On the other side of the market, we still see red colors still printing out there, both for the Saudi Arabia and the Qatari Stock Exchange, so both were in the red. And from the Middle East, we go over to the United States, where we see stock futures being mixed. First, starting off with the Dow Jones Industrial Average, the Dow 30, 0.01% in the green, and the S&P 500, as well as the NASDAQ, both in the green. And this is coming a day after tech stocks made some losses, which impacted the market. But of course, the market is still trying to hang on to some gains into the opening bell for Tuesday. And of course, the markets will be looking out for the second quarter results from market darling or market bellwether or tech bellwether Nvidia, which is expected to release its second quarter result, which is also expected today. And then, of course, the market is also expecting a result from luxury chain store Nordstrom, which is expected to release at the closing bell later today for the United States. But in terms of data, the market is also expecting that the Fed rates, which is still in the news, that the Fed would cut the interest rate, which is currently at about 5.25% and 5.50%. They're expecting like about a quarter of a percentage cut. So, but that would be expected. So, that's it for the markets, and keeping our eyes out for that US Fed rate cut.
Yeah, thank you so much, Anita.
Pleasure.
All right, so of course it's still the program, but let's take a short break now. When we come back, we'll head to London. Some interesting news I saw. Juliana will tell us if it's true or not. Let's take a break, we'll be back. Welcome back, still watching Business Incorporated on Channels Television. We head to London now, London studio, where, thank God, we have Juliana right there. Juliana, good afternoon. Do help us to confirm or refute this story about more companies in the UK, perhaps looking at sponsoring more work visa for Nigerians. I wonder how true that is.
Yeah, good afternoon, Annie. A really important topic, of course, not just for those in Nigeria looking to come to the UK for work, but also for the UK government, right? Because we know that alongside the economy, immigration is a huge talking point. And I know that there has been a story doing its rounds in Nigeria. According to the articles I've read this morning, they appear to be attributed to the Nation publication, suggesting that perhaps there has been an expansion of the list of sponsored locations or institutions that will enable you to come into the UK to work. Now, it doesn't appear to be true at all. And I've got to say, you've got to be very, very careful with stories like this. There's so much misinformation and disinformation doing its rounds on social media. So unless you hear an update from the official Home Office website, or, of course, you're engaging a legal practitioner who is able to advise on your particular case, do not take these headlines seriously, because the only update we have had from the UK government in terms of what happens or what's happening to skilled workers or foreign workers came in December last year, where the then Home Secretary, now Shadow Home Secretary, favourite to be the Tory leader, was from James Cleverly, basically increasing the salary threshold to, I believe, almost £40,000 for a skilled worker, and also changing the nature of how many dependents you can bring into the country when you choose to study here. Since then, there has been no official update, and all of those changes came into implementation from the 1st of April. Again, anybody who is fully aware of how the immigration system works in the UK, we typically have updates once, maybe twice a year that are implemented at the beginning of the fiscal year, which is April. So no indication that that has changed. Now, in terms of talking about the list of sponsored work locations, perhaps there has been an amendment or a chop and change to that, but there has been no official announcement. And it comes actually at quite an important time, Minnie, because just last week, I'm not sure if we were able to speak about it on air, but we did have official data from the Office for National Statistics, who, of course, keep a forensic eye on immigration figures in the UK. And they did announce that due to some of the plans that were implemented by James Cleverly and his predecessor, Suella Braverman, that the number of foreign workers coming into the UK, particularly working in social and the healthcare sector, has dropped dramatically. I believe numbers are down about 100,000. For some Tory supporters, for some individuals who support low immigration, this was really good news. And I think the Conservative Party have tried to take all of the credit for that. But then, of course, we know that the social health and social care in the UK is incredibly understaffed. Lots of the workers, particularly coming from Nigeria, who come to the UK for that work, are well overqualified, contribute significantly to the economy. So, you know, it's a double-edged sword here. Yes, the UK government are trying to appease those to the right. We saw protests, didn't we? Really dangerous protests a couple of weeks ago. They want to assure the local indigenous community that jobs are for them. But on the other hand, if locals in the UK don't want to do these jobs, who are going to do it, particularly if they're making it so hard? But just to go back to the top of what we were discussing, there has been no official announcement from the UK government about expanding foreign visa credentials for anybody, but particularly those in Nigeria. So if you are reading these headlines, the only thing you need to do is Google. Just Google Home Office, and then you will see that there has been no update. That's incredibly important, because we know that people are often
very
used
important,
and abused
Juliana,
when it comes to immigration advice.
Yeah, thank you for that update. That was really important, because that story is making the rounds here in Nigeria, and we do not want, you know, individuals to fall prey, you know, to those naughty individuals. Well, let's look at the markets there in the UK. What color is it this afternoon?
The colour is green, shall we say. The FTSE is in tip-top shape and intraday. This is despite the fact that it's a short week. Of course, it was bank holiday yesterday, which is why you didn't see us here in London. But I suppose markets perhaps haven't reacted to a statement that was delivered this morning by the UK Prime Minister Sir Keir Starmer, warning that the budget, which we're anticipating to come early October by the first female Chancellor of the Exchequer, Rachel Reeves, is going to be painful. And I quote Sir Keir Starmer in that term. He said it's going to be painful. This is, of course, all down to that black hole that was discovered when she opened the coffers to see that nothing was there. Not only was there no money there, the government had way overspent. So now the Labour government is saying that, you know, all of the tax hikes or whatever we're going to anticipate in that budget are basically at the fault of the Conservatives. Of course, they completely deny that. That hasn't been reflected on the numbers at intraday, but surely I'm sure markets are going to pick that up later today at close of business. But let's have a look at those numbers then. The all-share is up 0.10%. The FTSE 100, the blue chip, up 0.14%. The FTSE 250, the domestic market, down though at 0.12%. In the currencies market, the British pound is trading up against the US dollar by 0.30%, up 2 against the euro by 0.30%, and up against the Japanese yen by 0.42% at intraday.
Thank you so much, Juliana, for that.
Thank you.
All right, let's head to Berlin now, where the European Union has invested lots into its recent data protection laws aimed to protect data from companies, but especially private citizens, and where there's strict laws, there's often harsh penalties. That seems to be what a ride-hailing app, Uber, is facing right there. Lars has the details. Hi, Lars. Good afternoon.
Thanks for having me, Ini. Well, it's one of those stories I'm pretty sure we're about to see more often. The EU has put major data safeguards in place to protect citizens' data. And when companies are careless with that data, they make them pay. Now, the Dutch Data Protection Agency has hit taxi app Uber with a fine of 290 million euros simply for transferring European taxi drivers' data to servers in the United States. The agency, the name is DPA for short, by the way, has found that Uber collected sensitive information about its European drivers, such as taxi licenses, location data, and even criminal or medical data, and retained it on US servers. The DPA says that Uber made the transfers to its US databases, quote, without appropriately safeguarding the data with regard to those transfers. It sees this as a serious violation of Europe's General Data Protection Regulation. These relatively new data laws require businesses and governments to handle personal data with due care. But, and that's something Brussels is really concerned about, they say that this is not self-evident outside Europe. They worry that governments outside the bloc can tap data on a large scale.
Yeah, well, as you said, I believe this is a story we'll see more of. Let's head to the market, see what investors are doing.
Well, some economic data out of Berlin, and they're not exactly great. Germany's gross domestic product was revised downward for the April to June quarter, the second quarter of the year, and it's showing a drop of 0.1%. That's after a slightly positive first quarter. So we are not in a recession yet, but some economists worry that we'll get there very soon. Now, whether it's officially a recession or not, at least Germany is in a stagnation, and that in it by itself is worrisome. The drop in this past quarter came due to unexpectedly weak investments in machinery, as well as weakness in the construction sector. And staying with bad news, the consumer climate in Germany is down too. Now, it saw a peak during the football Euro Cup earlier this summer, with spending up and obviously the general mood in the country as well. But now seems we're grounded in a not so bright economic reality once more.
Yeah, thank you so much, Lars, for that. Now, let's talk about commodity. What commodity are we looking at today with all of the price watch release? Let's talk about kerosene. And we see, as with many other commodities at this time in Nigeria, that price has increased. I think it's increased by about 13%, 13.81%. To 1,769 naira 86 for 1 litre. Now, one would have thought with the issue of climate change everywhere, or gas, cooking gas being made available, according to government's effort, that kerosene would see less demand and no increase in price. But anyways, let's hear what Oluwaseun Lawal has to tell us about this. Oluwaseun is an analyst with Financial Derivatives Company. Hi, Oluwaseun. Good afternoon.
Good afternoon, Nini. Thank you for having me.
So tell us about drivers and what's going on with demand of kerosene. One would have thought everybody has migrated to cooking gas at this rate.
Basically, I wouldn't say everybody has migrated to cooking gas. Right now, only about 16% of the Nigerian population has adopted LPG, which we know as cooking gas, and the reason is not far-fetched. Number one, the cost of switching to cooking gas is quite expensive. I think if you want to get a 12 kg of cooking gas cylinder right now, it costs around 40,000 naira. 40,000 naira is more than the recently reviewed minimum wage, which is 30,000 naira. And so it is difficult for a lot of people to switch to that alternative. And 40,000 naira and also is enough for some company families to fuel their stove and this thing for like 2 months, thereabout. So we have that problem. And then let's not forget that in Nigeria, we are suffering from multidimensional poverty, which actually affects a lot of households and is preventing them from also using the cleaner alternative. So we see people using charcoal, and then in more remote areas of Nigeria, you will see them gathering sticks and firewood to as alternative to see this cooking gas. So about the increase in price, the problem we are having right now is that kerosene is one of the fully deregulated fuel in Nigeria. The price of kerosene is basically determined by the global dynamics. Kerosene is a derivative of crude oil, and crude oil is determined by the demand and supply globally. So we see that prices in June, the price of crude oil in June was a bit lower than what we had in July. So there was like a 1% increase averagely in July, so which fed to the prices of kerosene in Nigeria. And then we also saw the effect of exchange rate depreciation, which between June and July, we saw in the parallel market exchange rate lost like 5%. So that also feeds into the prices of kerosene that we have today.
All right, we know that Dangote is also supposed to, I think, already producing kerosene. Is that feeding into the market?
Well, not necessarily. And this is the reason. Dangote also sourced for dollar to buy crude oil from both NNPC and outside Nigeria. So unless the problem of exchange rate depreciation is actually dealt with, it's going to still translate to the consumers of kerosene and some other fuel products. So we see that the government recently said that they are going to be selling crude oil to refineries in Nigeria, which will take effect in October. So when that happens, then maybe we'll now see a stability in the price of kerosene. But for now, the price is still determined by the global dynamics.
All right, thank you so much, Oluwaseun, for that.
You're welcome.
So just before we head to the crypto space, now we'll tell you that in Zimbabwe, the monthly inflation rose to 0.4% in August 2024 as the local currency, which is the ZiG, depreciated on the parallel market. Data published by the Zimbabwe National Statistics Agency, ZimStat, shows that the weighted month-on-month inflation rate was 0.5% point on the July rate of minus 0.1. And in Ghana, the government has imposed an immediate ban on the export of key grains, including rice, corn, and soybeans, in response to an ongoing dry spell that is severely affecting the northern regions of the country. The move is to avert a potential food shortage caused by drought-induced crop failures. The Minister of Food and Agriculture, Brian Achepong, announced the decision during a press briefing in Accra, the country's capital. Now let's look at what's happening in the crypto space. Put our eyes on the board right there, and we see it's more red than we had yesterday. So Bitcoin's at $62,563.56, but that is after it has dropped more than 2% in the last 24 hours. Ethereum is also down $2,660.45, down 3.21%. But let's keep our eyes on the news now and see the headlines at this time. So there's that story. Oh, yesterday, dogs got listed, and I hear that some people are already making money from that. Dog sparks high interest in crypto community. That's one. There's also the Binance story in Nigeria. Yet to affirm the date, but I hear there's been a change of the date. I think it was supposed to be October 11. Haven't really gotten confirmation for this, the Binance executive case here in Nigeria. But let's have Olumide Adesina now to talk to us. I know he's very interested in the dogs listing. Hi, Olumide. Good afternoon.
Yeah, good afternoon. Thanks for having me.
Good to have you. So I know, I hear some people are already making money from this listing of the dogs.
Yeah, I think it's been a fairly successful event because you gotten to understand that a significant amount of people got airdrops. And if you know the size of that community, about 42 million, it was one of the most anticipated meme coin events this year. While it got listed on Binance, the opening price, it showed a moderation of about 25%. But it's fair to say that when you consider the exchange rate and what the average airdrop collector got, it's something good to say. But deeper into the crypto market, I think we've seen this year being very good for a lot of investors. Analyst Partners report brought out a data that there was 95% increase in the total number of people with crypto assets worth $1 million. Right now, we have about 172,300 around the world. And coming back home, Nigeria plays a major role in the crypto market in terms of number of users. The average Nigerian youth is interested in the crypto market, cut across. So, yeah, while we could talk about the Dogecoin excitement, I think it also shows that other assets are also gaining momentum, despite the fact that many of them are still trading below their 2021 highs.
So, Lumine, please, very briefly now, do you see this drawing more attention to that community, maybe a little bit away from the major crypto coins like Bitcoin and all of that?
It's quite dicey, but I think one of the things that we've seen this year is that institutional inflows really determine the sustainability and longevity of the crypto assets. Bitcoin and Ethereum have clearly shown that. You could see that Ethereum's lackluster performance is correlated with traditional disinterest in the super altcoin. Unlike Bitcoin, where you saw at some point it dropped below 50,000, and right now it's oscillating around 62,000. So the only concern we have is that we are entering the month where the US dollar usually have its best month. Data shows that in the last 10 years, the US dollar has come out positive 8 times. So the crypto markets will definitely have pressure in that place. And like I said, it's really going to be a very dicey moment at that period.
All right, Olumide, dicey, but we'll keep our eyes on it. Thank you so much for your time.
Yeah, thank you for having me.
So that's it on the program. Thank you so much for being a part of this. About 55 minutes of going around the world of business. We promise to give you a better package tomorrow, beginning from 10 a.m. and then 1 p.m. But of course, I'll see you at 10 p.m. See how the market, the NGX, closes today. I hope it's green.